New tax laws coming into play, y'all. With this, homeowners. You own your personal home. Here's how it's coming into play for you. Right now, what we've got still in existence, permanent, in play, is the exclusion on the sale of your personal residence. You've lived in at least 2 of the last 5 years. Your gain's less than $250,000 per person, less than $500,000 married finally jointly. Boom, it is tax-free. There's not many in the tax laws that get to take advantage of something that is tax-free. How do you figure out your gain? Not that hard. What's your selling price minus everything else then determines your gain. What did you sell it for? Minus what you bought it for. Minus your closing costs when you bought it. Minus your closing costs when you sold it. Selling prices. Any kind of fees that you've got related to buying and selling. You had to improve it to be able to sell it, repair it. All the expenses that went into that, you'll be able to deduct it from the sales price to determine that gain. If you have a gain above and beyond that, well, it's capital gain, depending on how long you have owned it. But that's still in play, and that is freaking huge. Also, the mortgage interest deduction. It is staying alive, but it's staying alive with the law that came into play in 2018. This means this, pay attention. It is on your mortgages up to $750,000, but really hear this one, okay? It's not going to be on your HELOC, it's not going to be on your line of credit, and only the loan related to the purchase of your house is going to be what you get to deduct, or if you enlarge it or improve it. So, pay attention. Talk to your tax advisor when you're buying a personal residence to determine should you finance it. How much? This is a big, big no-no for those that want to pay something down but then borrow from it very soon thereafter. You've got to pay attention to these tax strategies to ensure that you're getting that mortgage interest deduction. Also, moving expenses, not deductible unless you're in the armed forces. That's going to continue where you won't be able to deduct it. I'm just going to throw a side note in there for many primary homeowners. You also own a vehicle. Don't miss this one. We've got vehicle loan interest deduction. Has nothing to do with being a homeowner, but many that own a house, they've got a car loan. Well, we get to deduct that interest up to $10,000 a year. So be sure you're paying attention to that. I've got other videos. Check it out. All right. Hey, thanks for tuning in. I'm JJ the CPA, America's CPA. I appreciate you. I love you. And I'd love it if you'd subscribe. All right. Hey, thanks for tuning in, and you have a great one.